Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. Take that finger, hit that like button. If you're new, like, subscribe, and a notification bell. Come join this family where we just concentrate on making money. We let everybody else argue. We just keep our eye on the prize. Hey, this video is sponsored by me, Stock Up University. Stock Up U. It will be your top link below. Come and let all of us just help you become a better trader and make more money. Let's get right into it, okay? That'll be the top link below in the description. You may see a link posted there also. A lot going on. All right, a lot going on. Triple witching is today. You got trillions of dollars of options expiring today, and the market should be actually more volatile than it is today. The market is showing itself to be extremely resilient and strong, but caution, caution, caution. For those of you that's been following me for a while, you know I talked about how the market normally actually runs up and then it falls, runs up and then it falls. No one has a crystal ball, and I've been warning about a recession coming, and I specifically have been saying the end of this year, Q4, or Q1 of next year. Now, that is not 100%, it's not written in stone, but it's still on the table, right? And the Fed is doing what he does. There is a possibility of two more rate hikes. We know that from the Fed, and there's a lot going on. So I want you guys to know this that don't know, because this is extremely important. The yield curve has been inverted for 12 months. 12 months the yield curve has been inverted, right? So you're getting paid more on the 2-year than the 10-year. That's what's called an inverted yield curve. Generally, within 18 months of that happening, we wind up in a recession. But what's happening right now? Why is the market so resilient? Why is the market so strong? Believe it or not, there's only 7 companies holding up the entire stock market, at least the S&P 500. Let's look at some of the things that's going on right now. Look, we got Apple, Microsoft, and Nvidia hitting all-time highs, right? They're all hitting highs. Look at that. Look at that. Let's do a 5-year. You see that spike? You see that? Bam. Look at that. Let's go maximum. Look at that. Look at all 3 of those companies. These are major drivers. But when you see stuff like that happening in the long term, in the short term, is it good news? Yeah, it looks really nice. But long term, we know that the market is getting frothy. That means that it's getting too expensive, that it is nearing the top, right? Trees don't grow to the tree. But because of AI and the AI phenomenon that everybody's chasing now, so we're in the chase. We're in what's called the chase. And a lot of people are chasing these stocks, and they're not looking at anything. They're not looking at PEs. They haven't taken my class. They don't know how to read a balance sheet, not any of that. And they're just chasing the PEs because it sounds good, tickling ears, which is further driving the price up. The problem is the higher it goes, the further it has to fall when the shoe does finally drop, which no one has. As a matter of fact, there is really 7 companies that are holding up the entire stock market. And the other 490-ish, 493-ish companies of the S&P are actually down, all right? So we got Nvidia, Meta, Amazon, Microsoft, Tesla, Google, and Apple, known as the Magnificent Seven, that is really holding up this stock market. And then you have almost 500 other companies of the S&P, I think it's 593-ish, around 590, that are actually not doing good, that are not doing well. You know, just like I just showed you guys, you got all-time highs for Apple, Microsoft, and Nvidia. What is driving those three companies right now in the short term? AI, artificial intelligence. And the AI talk is just too much, and we are in a bubble, I believe. Remember, anything I say is not a suggestion for you to buy, hold, or sell. I believe we are in a bubble, but Larry, I see you going in and grabbing stock and making money. You're absolutely right because of momentum. We are in a momentum cycle right now where momentum is just driving the market higher and higher. So that's why I choose to get in, get out, cash out. Now, I played this video on this morning's live, and I want you guys to make sure and listen to every word of this because it's very important.
In macro research, we'll start with the stock market, I guess, and we want to talk bonds also. So is this is there more to come, or are we at the high end of a range in your view?
Well, so I've been thinking about it this way. This entire move has come against the backdrop of an inverted curve. And we went back and we looked, what were the largest rallies ever with an inverted yield curve? You have two big outliers. 1979, you get about a 30% S&P rally, and the curve was inverted the entire time. And mid-06 to mid-07, I think a period we remember well, 30% S&P rally with an inverted curve. So if we put 30% on the October lows from last year, gets you about 4,500. So we trade 44.25 today. My suspicion is we're pushing up against the higher end of the range. But at the end of the day, the trend is the trend, and you can't fight the trend. And that's just history, and you have to respect the price momentum here. So I would watch two things. I'd say, number one, when we've seen markets falter in the past, it's with leadership changes. This has been very pro-cyclical leadership, particularly the last several weeks. So I think if something's going to change, that would have to be the knife's edge, and there's no evidence of that yet here.
The reason that I said we'll start with stocks is because in terms of yields, you think we're going to break out to higher yields. And I'm trying to decide whether that would mean the economy is in pretty good shape, which could be good for stocks, or it could mean that the doubt that the bond market has had, that the fit of...
So he's talking about the yield now. The yield curves, the yield is exactly what he's talking about, the 10-year and the 2-year, but all of the yields they're just pushing higher. They just keep going up, right? And he further goes on to talk about what you should be, I'm not going to play it. He's saying that when the yields start falling or you see a change in the yields, so, if you're watching CNBC and you see the 10, the 2, the 7, all of these different yields, the yields are what you're getting paid, right? It's what the bonds are yielding. If they start to change, he goes on to say that's when it's a signal that we could reverse and go the other way. All right. I don't want to play the other thing. All right. So listen, this is what he's talking about in 2008, where it just went up and we had an inverted yield curve then. And then, of course, we had the fall. This was the recession let's get rid of this. This was the recession right here. The recession of 2008 actually started in 2007. It went from 2007 to 2010, actually. Right? So let's see here. Yeah, it went from 2007 to 2010. That was the recession. Now, what he was talking about was the October lows, where we are from the October lows, right? Let's go to the October lows. So the lows of October, right? So he's saying that from the lows of October, we should be hitting about 4,500 on the S&P, which we are already at 44. And he's saying historically, that was the range of how far the market went up while the yield curve was inverted. Follow? And so the yield curve has been inverted for the last 12 months. Now, we have to pay attention to this. I know this sounds very technical and confusing to those of you that are new, but we have to pay attention to this because, they says, there's a saying, history never repeats itself, but it does rhyme. And this is rhyming like 2008, like right now. So what I'm saying to you guys is man, make sure you have your stop losses triggered. For those of you that are doing the DCAing, someone asked me a question. It was a very good question. Hey, Larry, I've been following you for the last 2 years, and I've been DCAing in my top stocks, my top 5 stocks, right? Now, one of them was NVIDIA, right? And you guys know that's taking the Larry Jones $5 a day challenge, and they were up over 100%. And I said, hey, they said, can I take profits? I says, by all means, you could take profits. Number one, you don't need permission. But in your taking profits, this is what I ask. If you are up 100%, and this person had a lot in NVIDIA, if you're up in 100% and you take profits right now, or you set a stop loss where where it triggers, but he had so much in there, I said, take profits. Yeah. And even in the $5 a day challenge. Now, this is not one size fit all. This person had a lot of money in there. Now, my question to him is after the fall, whenever it is, if it's the end of this year or the end of next year, whenever it falls, and if it falls, especially past the October lows, will you keep that money and reinvest it into a company that you think is going to continue? NVIDIA. Will you reinvest your money into NVIDIA? So that is something for idea, just for you guys to think about. Okay, so those are the things I wanted us to keep our eyes on. I don't want to make this long, but just keep your eyes on the market. Now, those plays that I was in, I sold them all because this is a 3-day weekend. Monday is a holiday. It is Juneteenth. Look it up. And so I don't like holding a lot of options over 3-day weekends because anything could happen. You guys know I had a lot of Chinese ADRs. Anything could happen over the weekend. And I have learned to take profits. I can always enter back in on Tuesday. Okay. So that's what I wanted to leave with you guys, and make sure that you get all these notifications, because what are we doing here at Stock Up with Larry Jones? We are not just trying to look for a bottom or look for the top. We trade the market that we're in, and we have adopted that. You have to be willing and ready to shift when the market shifts, because anything could happen. One news story will ruin your technicals. One news story will ignore the fundamentals of a stock, meaning the stock could be a great company, great earnings, a lot of assets, low liabilities. And then one news story can cause that stock to tank, right? And you've done your fundamentals. Now, technically, things could be looking very bullish, and one news story happens. Let's say technically Tesla looks bullish, and then one bad news story, 2 Teslas that are on the automatic pilot, which is not fully functional yet, and they hit each other, right? Boom, what's going to happen to Tesla stock. It's going to sink. Now, the technicals could not have foreseen that. So we have to be ready to pivot. Okay, good people? Hey, make sure you get your 17 free stock. Listen, get your deposits in. Here is why. This is a limited time only. Look at this. If you put 100 in, 2 things you're getting. You're getting the cash reward of the $100, and you're getting 1 free share of C3AI, which is another stock that keeps having these green days. It cooled off today. It was up this morning, but it is not over. It just keeps, I keep getting into C3AI option plays, and I keep making ridiculous money off of C3AI, which is ticker symbol AI. And then with that stock, I'm out like the same day. Good people, I'm in and I'm out. We're going to leave it there. Listen, it's Father's Day weekend. Make sure you take care of dad, all right? And if you're a father, happy Father's Day. I will be talking with you guys this weekend, okay? Listen, live, love, laugh, and learn. Be kind, rewind, do it again. Have a blessed weekend.